Hey, everybody. Thank you all for being here. Appreciate it. This is probably a very interesting video, but it shows a couple of things. One, I believe it could be one of the most important videos I've ever done. Second, it's also very important for us to always challenge our own biases. And this whole video encapsulates the dedication of one Patreon member that took time to collate everything I've said over the past couple of months about why I believe the bottom is in, and then bring counterpoints to that. So there's about 15 big, meaty subjects, and I will respond to each of them individually. So the question, really high level, is the bottom in? This member believes it's not, and raised 15 excellent points as to why it's not. So let's go through and conclude at the end if it is in or not, and if it matters. And that's the whole idea here. So first of all, none of this is investment advice, never is. And I'm proud to introduce you to our member. RSCX goes by being a pessimistic bull and an optimistic bear, and he broke down all my recent macro points of view and thinks the bottom is not in, but the level of detail was quite amazing. So let's go through all these points real quick. And at the very end, I'll have a scorecard as to if we agree or disagree and how important it actually is, as well as we pulled in a whole bunch of data into this video. So tons of learning here for everybody. So point number one is ghost chains haven't died. And, basically the crux of this, as is his writing, is we cannot move forward until all the ghost chains die. That's the crux of this. But when we go back to history, we have to look at this. Ghost chains become zombie chains. This is the top 2,412 coins from the last cycle. And this was an analysis done by Willy Woo, who looked at all of these, and he found that 90% of them were what he called degenerators. Not degens, but degenerators. We'll talk more about degens later. And these coins were once the darlings of past cycles and had huge run-ups, and over time, price deteriorated, approaching zero. They never actually died, but rather their price and trading volume behaves like the half-life in radioactive decay. And this is the destiny of most ghost chains, and it's rare to see a spectacular blow-up like Luna, etc. Rather, most ghost chains become zombies and half-life over the course of 4 to 10 years. Many never die, but sometimes humans have that degen element and they still invest in them as well. So that's the problem with ghost chains. Next question. Oh, and in summary of that, of course, ghost chains don't need to die for the market to move on. And we've seen people degenning into stuff even during the market downturn when many believed the Bitcoin dominance would explode. That didn't happen. Next question. Miners haven't fully capitulated. And basically, until the miners fully capitulate, we will not be at a bottom, is kind of the crux of this. And of course, there is some shakeout to be seen in the miner industry. There are some that are just not, they don't have strong enough balance sheets to survive what we're going through right now. But let's talk about miner capitulation. First of all, the narrative of it is a little bit overstated. And here is some perspective of how bad the miner capitulation is compared to last capitulation events for miners. Now, we created a model in TradingView to capture the miner capitulation using hash rate. And you can see that the current capitulation is a nothing burger compared to past capitulations, which could be good or bad depending on how you view it. But first, despite the capitulation, we are still near all-time highs in hash rates. And you can see that the current capitulation is still going. No, sorry. Somebody just texted me there saying I need to speak up. Sorry. First, despite the capitulation, we are still near all-time highs in hash rate, and the trend is still going up. Second, the past minor capitulations have dipped much further and happened at a much lower hash rate. And based on past capitulations, they typically last anywhere from 30 to 60 days. And the current capitulation is on its 50th day. So you could rightly say, yes, we could have further down to go, but miners know they need to hodl Bitcoin and they know where the price is going better than probably most. So let's talk about the China ban as a comparison. Comparing to the China ban capitulation event, this event really is a nothing burger. And that even was a 40% dip, but it started recovering on roughly the 57th day. And remember, we're at the 50th day. And our current capitulation is roughly 8%, which is in line with that of other events that are around 10 to 20%. So from that perspective, it should not be a problem. So next point is Mt. Gox. This one is very interesting, and this one is on my radar and is a little bit concerning. Now, the Mt. Gox unlock of 150,000 Bitcoin will cause waves in the market. Do I think everybody will sell? No, absolutely not, etc. But let's dig into this and my approach of this concern. And again, a lot of numbers here. But first of all, the actual details. It's not 150,000. It's about 137,000 Bitcoin, worth about $2.7 billion. And it's estimated to be released starting August. And this is a big reduction from the amount that was actually lost during the hack of 850,000. And payment can be either made in cash or Bitcoin. But remember, the OGs that were involved in this, they're not going to sell if they've waited so long. So my thoughts, one is between 20 and 50% could be sold over a time frame of 12 weeks. And again, the OGs may sell some to do things like buy a house or something they wanted because they waited nearly a decade to get this back. So let's run through the three scenarios. If 20% sell, if 33% sell, and if 50% sell. Now, I have a thing called the amplifier that I use to calculate the actual effect on market price. So here, this is the math behind if 20% sell. So that would be 20% of 137,000 coins, which is 27,400. The multiplier is 21. That's the impact on market cap. That will be shaved off. And the impact on Bitcoin price is about $616, which will put us down at 21,884 from where the price is today. Now, if 33% sell, that is 45,000 coins, the impact on price will take it down just over $1,000 to $21,483. And if half sell, a little more extreme, but the price of the dumping of 68,500 coins on the market will take Bitcoin price down by about $1,541, which will take us just under 21,000. So again, not the end of the world if this actually does happen. So again, not very concerned about that. I watch it, but I don't believe it'll be the end of the world. And we actually saw as well what Tesla did and how that impacted the market in line with miners selling and everybody else kind of liquidating and cascading, and it was a complete mess. But again, we survived. So that's one of the reasons why we believe we've been through a very bad storm and maybe the bottom is in. Next is the incoming regulation of stablecoins. And here we talk about this and having a big effect on the crypto market. So let's jump into what that actually means for stablecoins. So first of all, Terra was an outlier. There are no more of those that we can see on the horizon, at least not as big. Algorithmic stablecoins will always lose the peg. History has proven that. And Wall Street wants to own stablecoins, and lawmakers are more sound in the United States over the EU regarding this. But US lawmakers are also very far behind the kind of learning curve as to what this space is all about. And this will all move at the speed of government. So, basic stablecoin regulation that is needed, real simple. I don't even know why it takes them years to do this. You need proof of reserves. You need to be able to disclose precise assets and deposits redemptions. This has happened in other industries, other related financial services industries. They need, any issuer needs a federal license in the US, for example, if it's issued in the US. And they need banks to be allowed to issue them as well. Real simple. 4 pieces. Why don't they just put the regulation together? I don't know. Now, in terms of the best case, here, this is an article from the block, but bipartisan stablecoin regulation has a slim chance of passing this year. And the best case, the bill would be unveiled in, sometime this month or September. And it'll hit the markup stage where politicians introducing it will weigh in. It'll hit the floor. It'll go through a number of iterations, but approval before year end is very unlikely. So we don't have to worry about that in 2022. And the markets aren't going to wait for this regulation, so I don't think it's a big issue. So next is the incoming securities regulation of crypto assets. And here, this one is very interesting because yes, regulation is very much needed in the space. Very good points made here as well. There are criminals that had a very malicious intent. They cost many people a lot of money, and it's terrible. But one of the things that did happen is Bitcoin and Ethereum, in a recent piece of legislation that hasn't been passed, of course, were considered commodities. They are Bitcoin and Ethereum. So this is, again, Bitcoin and Ether to be regulated as commodities by CFTC per new Senate bill. But again, the problem is the CFTC is very small. It's a sixth the size of the SEC. And can they actually regulate it? I don't know. But it's good news for Bitcoin and Ethereum. One of the reasons they are very, very large holdings, because they are the safest asset. That's why we built the Crypto Compendium in March 2021 to identify regulatory risk and other token risk as well. So the SEC, now, this is the big question, is what happens if they start going after key layer ones that we all have? Well, basically, how can they go after 19,000 cryptos with limited staff? The SEC, that is. There is, of course, the Coinbase insider trading case that they're doing right now. And 9 crypto tokens have been classified as securities. We covered this a few days ago as well. But we'll see what actually happens here. But again, there's so much to do. And could there be a target on the back of certain L1s? Yes, perhaps. But we'll see. Now, let's just as to the speed at which and the difficulty it takes to process a case, XRP. This has been in the courts for years. And I know XRP and Ripple have spent hundreds of millions of dollars in legal fees. And this is the old headline from years and years ago because of an unregistered securities offering. Again, years and years have passed. Hundreds of millions of dollars in legal fees. No joy. How can they prosecute 19,000 of these? The answer is it's extremely difficult to do. So again, don't worry about it till it gets close to happening, and that's going to be a long ways off. Remember, the speed of government is very slow. Next question, issue is institutions and Tesla selling Bitcoin. So this is where I'm quoted. Believe that there was a wall of money coming into the market, institutional money. Many people believe that to be the case, but we were caught out by the cascading liquidations, which have caused some people to run away. But that being said, there are some things that are happening, and Tesla did sell, but each one of those has a different reason. So first of all, on-chain is 80% of the buys since the beginning of the year are 10,000 plus Bitcoin wallets, 10,000 to 100,000 Bitcoin. And they are the people accumulating during this bear market. And that is the big money. And also, the 0.1 to 10 Bitcoin are also accumulating, but they only make up 20% of the market. So the big money is buying. They're buying that behind the scenes, but you don't hear about it. Now, stablecoin balances are still high. There's lots of stablecoins on the sideline, which is a very good issue. And regarding Elon Musk selling, yes, he did, but he was extremely worried about cash flow and cash burn because his gigafactories are money furnaces, as he described them himself. So he doesn't want his baby to go bankrupt. So he tested liquidity with a $100 million sale last year, and he got rid of 3/4 this year. And that's just prudent financial management. He still believes in Bitcoin, and he has a big personal stash as well as Dogecoin, but we won't talk about that. So next is fallout from Coinbase insider trading case. This will likely lead to an increased scrutiny in how exchanges list coins, etc. Yes, you're dead right there. There will be much more scrutiny, but they have so limited resources. That's the real problem here. Now, the fallout of this case is, yes, they may get a smack on the wrist, and anybody else who violates rules, yes, they get a smack on the wrist. You know, Robinhood, all these exchanges, JP Morgan, smack on the wrist every quarter, every year. It's just par for the course. It's the pay-to-play method. And BlackRock, I believe, would not have gotten into bed with Coinbase if there was any risk. And these games have been played since the beginning of time. So again, nothing burger, not too concerned about it. So Gamefi as a use case for crypto sucks. So I know when to back down from certain topics, and you're talking about Zelda and Breath of Genshin Impact and all this type of stuff and football NFTs. I get out of my depth real fast here, but we did have some people help me as well on this. So the popularity of crypto games says otherwise, i.e. crypto games may suck. They may not be as good as the ones you buy and plug into a console or whatever. But Axie Infinity, Alien Worlds, Splinterlands, DeFi Kingdoms prove that there is a viable crypto game ecosystem. They are popular and they attract still, despite the downturn, 100,000 to 500,000 daily players. And we can't say if all these games are going to be around in the future. It is a cutthroat business. People that play these games are probably very fickle and move on to the next game as things change, but that's where we are. In addition, big studios beg to differ. You have news of everybody getting in on the game. Disney is trying to get in on NFTs. There are people trying to promote NFTs to fund the creation of movies. You've got Fortnite's metaverse concerts that are extremely popular with Gen Z, and on and on. Ariana Grande, Travis Scott, Marshmello, all these people are kind of in on the game. So again, the space is not going away. People understand it is going to be an important currency of the future. But the industry, you're dead right, has a lot of stuff to work through. The demand isn't there. Intellectual property rights are complicated. Do studios own IP rights to NFTs? The law is not clear. Also, the technology is not fully mature yet too. There's a lot of limitations as to what can happen over time, especially over the next 5 years. But the next 5 years, we will see a big radical change in this area. NFTs, while not that interesting to me, will be a big part of our future. No ifs, ands, or buts. Next piece is one of the videos you referred to. I spoke about daily active users. We look at them a lot by all the chains. And you mentioned Solana right now has a market cap of 18 billion. Per James' video a couple of days ago, I think it was a few months ago, 250,000 daily active users. That's correct. Works out about 58,000 per daily active user. How is this even sustainable? Dead right. So let's look at a couple of names. And first of all, yes, this at a current rate with zero growth is ridiculous in terms of valuation. So here are the daily active users in blue on the left axis, and on the right axis is the market cap per daily active user. That's the one I want you to focus in on, the red bar chart. So Ethereum trades now at nearly $800,000 in market cap per daily active user. Solana trades at about, I think it's 48,000, 47,000, I'm not sure. And Cardano trades at about 300,000 per active user. This is the data, okay? And yes, it is extremely high, but let's drill into just an idea of how we could justify this. So again, like in investing, you play to where the puck is going to be. For example, it's very clear Solana and Anatoly, they want to have 1 million transactions per second at some stage in the future, and or 1 billion users. Well, to support 1 billion users, you need 1 billion TPS. No ifs, ands, or buts. So if you look at the TPS here, I just threw some numbers together. Rough back of the napkin numbers, okay? 3,000 TPS today, transactions per year, about 260 million seconds, because that's based on seconds per day of 86,400. The fee per transaction in Sol. If Sol is priced at $40 and as it grows and gets adopted more, the price will go up to $200. That'll give you the market cap today and the PE of 205,000, which is extremely high. But if you start going towards the max TPS that the system's currently capable of today of 65,000, in fact, it ran up to 400,000 last year, that'll take the PE down to 9,400. And the vision, if you get to 1 million TPS, based on the same little transaction fee, it's only $616, but there's so much more that happens on the chain that needs to be valued. The transfer of value, the memberships, all of the ecosystem that uses Solana will drive up demand. Look at the Steppen app as a move to earn type game and everything else. This is where they're going. So looking at the valuations now, yes, you are dead right. They are ridiculous, absolutely ridiculous. But look at car companies. I think Lucid Air makes... it has a $32 billion market cap, makes 1,600 cars. Do that math too. It's kind of also sounds a bit ridiculous. So again, you got to look for the long-term future, which chain will win, which chain will rule everything. And again, it's a very risky space. That's why we invest in other things too. So next thing is looming food shortage. James has mentioned Russia, Ukraine have signed an agreement to allow grain shipments, but we don't know yet if Russia will honor it. Right now, it's hard to believe the nation massacring civilians. Well, I'm not going to talk about that stuff because it is horrible, but food shortage is everywhere, and it's really bad. We saw recently the riots in Sri Lanka, and what happened there, because hunger makes people very angry and they stand up and they revolt, and this is going to happen all over the world. Now, quick piece on food shortage impact on the economy, and using the framework of human capital theory, yes, there is evidence that food insecurity can negatively affect the US economy and any other economy as well. And there's a weird paradox as well, because despite food becoming more expensive and even scarce, it actually does drive things like obesity, which is a serious problem today because people eat cheaper food, which is not healthy, hence junk food exists and stuff like that. Now, child hunger is also... anyway, you can read that yourselves. I don't want to get down that rabbit hole, but it is definitely a catastrophe. And globally, it will cause civil unrest. But the key factor is, how does it impact the market? So first of all, I do believe Putin will cooperate. He does not want the blood of 10 million or 100 million people dying of famine on his hands, despite maybe some bad things that are happening right now. The food shortage is real, no doubt about that. There's tons of other data. But the question is, does it impact stock markets? No, sadly, it doesn't. So that's just a fact of life. It is important, but it doesn't impact markets, in my opinion. Now, looming worldwide debt crisis. Per Jeff Booth, he stated, for every $1 of wealth created, $3 of debt is created. Yes, that is very, very true. And the question is, could this result in a lost decade? Well, we've seen a lost 3 decades in the Japanese stock market because of crazy money printing and debt. But the question is the US in that same situation? Let's look at a few things. First of all, I do call this QE to infinity. So I do believe there is no escaping the debt bubble. And it can only be tamed by increasing debt, which means money printing, and also inflating our way out of it. That's a key thing that not many people talk about, but I think it's very important. That's why they talk about inflation going to 2%, but really they'd be happy to keep it at 5 or 6%, but manufacture the number to make you think it's at 2%. And this is perhaps the main reason, after scarcity, that I'm so bullish on Bitcoin, because QE is going to infinity. You need hard assets, real estate, Bitcoin, etc. This is why I'm so bullish on it. So let's talk about the next one. Inventories to cause revenue and margin misses. Yes, I did talk about Walmart and Target and having to cut prices, and their earnings are going to suck and the stocks will go down. But remember, the market is forward-looking. It takes this into account real fast, and they get dinged real hard, sometimes overnight, and then they recover. So remember, markets move fast. Risk moves fast, especially in this day and age. So let's talk about retailers. Retailers will get hit. Amazon, or Costco seems to be doing fine, but Target and Walmart are definitely getting hit right now. But look at this, Amazon, which is considered a retailer, even though nearly half of the revenue comes from AWS. It's up 40% in 40 days. This is what we mean by kind of the market bottom. This is how fast things move. There are many cryptos that are up over 100% in the same 40-day time frame. So again, is the bottom in? We'll see. A lot of things look like people have begun to spend. Now let's switch gears from retail inventories to ISM. Now the ISM is a key thing that I look at a lot. It is the manufacturing index. It's also sometimes called the PMI, which is Purchasing Managers Index. And it's a monthly indicator of US economic activity based on a survey of purchasing managers at hundreds and hundreds of manufacturing firms and factories and stuff. And this is a key indicator of the state of the US economy. Now, if you look at the chart here, the purple is the ISM for services, and the orange is the ISM for manufacturing. And of course, the US is much more of a services industry than a manufacturing industry. And you can see the purple has gone up. So this is a very positive sign. This is a ray of sunshine, a little bit of optimism. Yes, the manufacturing is down, but services is up. So we'll see. This is why many believe that the recession we're in now could be quite shallow. It could be buoyed by some services. I think there's a lot more pain to come, but not that bad. Let's talk as well about another thing as well. Like ghost chains in crypto, many companies struggle. This is an old chart that I dug up of zombie firms, but it says, between 10 and 15% of companies out there are zombie firms. They just don't know it yet. I think it's more like 30%, which means they're just like ghost chains. They're existing, but they're not out of business yet, but they're kind of shriveling up and dying slowly. In addition, this also, I've stressed this so many times, that you have to focus on the right companies. 1% of companies over the last 5 years generated 48.4% of the return. That is bang. 5 companies, Google, Facebook, Amazon, Microsoft, Apple, generated half of the S&P 500 return. That is 5 out of 500 companies. So the point is, be on the right horses. Very important. Back the winners. A ton of companies will lose money, but very few will win. So that's very important. Stagflation. Next question. James has pounded his fist for 8 to 9 months ago on video. Stagflation is here. I did talk about it in summer of 2021 because I saw high inflation coming, and I also expected a GDP slowdown, which is all happening. So that was good. But the question is, what happens in a stagflationary environment? And we don't have a lot of analogs to look at, unfortunately, for this particular area. So first of all, we agree with all things violently. Unemployment will explode. No doubt about that. The question is how fast the Fed will print us out of recession. And a quick MMT refresher. Last time I spoke about this, people say, no, that's not the definition of MMT. But modern monetary theory, basically, in my view, is when governments don't have to rely on taxes to spend. They can print as much as they want, as they are the monopoly issuers of the currency. And since their budgets aren't like a regular household, like you and I out there, their policies are not shaped by fears of a rising national debt. And we are way, way, way beyond the tipping point of being able to get back or grow ourselves out of debt. And back to stagflation for a second as well. Stagflation is bad for consumers because you're making less money and everything costs more, and you may not have a job. And that is really a bad situation to be in. But I don't see them allowing that to happen for a long time. That's why I also believe the Fed will pivot, because they can't go above 3.5% Fed funds rate. Done tons of videos on this for months and months now. And after what he said recently, that was a very dovish speech, if you read between the lines. Now, that doesn't mean they won't, increase the rates to bring us into Armageddon. If you listen to some of the people on the different federal banks around the country, they're clueless. So they say, oh, inflation's a problem, so we got to keep on raising rates. But they don't understand the big picture. Sometimes I wonder how these people got their jobs. Anyhow, that's that. Again, there's no analog. It will be ugly, but there is some good news. So think of stagflation. A key part is negative growth, which is a recession. So what I'm going to show you here is the stock market during recessions. I just pull this together. So here you have all the recession years: 1945, 49, 53, 57, 60, 70, 74, 80, 82, 90, 2001, 2008, and 2020. The S&P return in a recession year, all those numbers are there. Some years have 30% returns. In 1945, 1980, 26%, 2020, 16.3%. Yeah, I'm cherry picking the good ones. 2008, minus 38%, but that was a global depression. That was a different kettle of fish altogether. We might be going into that path, but I do believe will be printed out. Now, the key is what happens in the following year after a recession. You can see those returns there. I don't even need to call them out. They are all positive. So the S&P return in the year of the recession is minus 0.32%. Is that worth getting out of the market for? No. And the following year, up 17%. You want to be in the market when the train leaves the station. So that is just history there, and I think it's very important. Here is a visual of what these years look like if you want to see them on a chart. You can see the blue is the S&P return in a recession year. The black line across the middle is 0%. You can see there are more blue dots above the line than below the line, and the red is the following year. Again, much more. There's only 3 cases in the history that I could find that the following year was negative. And sometimes that happened after the recession year was extremely positive, like 1940. So again, a bit of history for you all there. Remember, I did a video as well here on how markets or numbers go up technology. Very important. So let's talk more. One topic you did not raise, but I think is very, very important to talk about is the China-Taiwan War. This is top of mind for me, and this is a concern. We got an alert on my phone late last night from the BBC about missiles and all sorts of scary stuff. But this is the skinny here. China-Taiwan invasion. According to this article, no, China won't invade Taiwan in 2022, 2023, or 2024, and this is why. Basically, it would be a career-ending mistake for Xi Jinping. And the recent Nancy Pelosi trip to Taiwan shows the power dynamics between the US and China, and it's still strongly in favor of the US, so we'll see. But China did do a bunch of complaining, saber rattling, fired some missiles, did some military drills, etc., as Nancy Pelosi flew into Taiwan. Why she did that, I don't know. But anyway, we'll talk about that in a second. But we'll see. I think net, the chances of this are low. And remember, China plays the long game. They don't need to force things from happening. So, in terms of China war, Pelosi going to Taiwan does not help the situation, and it does not change the balance of power. Taiwan is not Ukraine, and the US is committed to defend it, and either wants to start World War III or be a hero for peace or protect her her bags in NVIDIA. That's semiconductor bags, SC there. So we're not sure what her motivation was by doing this. Maybe it's her swan song. It's like, I'm going to retire. I'm going to do one last big hooray. Look how powerful I am. I don't know, but I thought it was quite reckless. So did Joe Biden, I think, as well. But anyway, China played the long game, and they witnessed sanctions on Russia. And China is also in a very precarious position domestically too, because of Evergrande. And there's a whole bunch of other stuff as well with sea lanes and water lanes and transportation. It would just be very messy if they did that. So they're not going to. So let's summarize. I don't know how long I've been talking, but this is the overall scorecard. So RSCX, thank you so much for your brilliant comments on everything else. So you can see here, we only disagree on two items. Like ghost chains need to die before we can move forward. We disagree on that. And Gamefi, we disagree on that too. The rest of the stuff we agree on. But the question is, how important is it to markets? So ghost chains, low importance. Miners, capitulating, low to medium. Mt. Gox, low to medium. Crypto regulation, low to medium. But it's going to take a long time for them to get their act together. L1 cost per user, medium. There are a lot of chains, a lot of layer ones that are completely overvalued. No doubt about that. But you got to look at growth. Growth and adoption and breadth of dApps and all that stuff. That's what we look at very carefully here. Debt crisis, huge problem. Very concerned about that. And that's why I believe it's QE to infinity, and that's why I'm very bullish on Bitcoin. And stagflation, very worried about that too. That doesn't do anybody good, but we don't have a good analog to say exactly what will happen. But we do know recessions now happen fast, and the recovery should be very fast, barring any horrible situation. And finally, China, Taiwan. That's probably my biggest concern from this whole list. It is very high. So the odds may be very small, but the ramifications would be tremendously high and would not... If that does happen, we don't have to worry about our bags. We've got other things to worry about. So let's talk about the lessons from this long session. First of all, the 30,000 foot summary. Buy when there is blood in the street. Yes, it's scary. Yes, people may have PTSD from being beaten down. Yes, it's been a whole cascading set of events that have taken us back here. But it was pretty clear for many different reasons. Like TA says the bottom is in. On-chain said the bottom is in. Sentiment said the bottom is in. And bad times make for good buys. So also some top experts as well, like Tom Lee, say the bottom is in. Kathy Wood, well, I know I should have talked about Kathy Wood after she nailed the perfect bottom in Coinbase before selling it. But anyway, conclusion number 2. I could certainly be wrong, and we may see another bottom, okay? So again, I don't have a crystal ball. I just look at data. We may go back down again. Would we go below 17.5? I highly doubt it. If we go back to 17.5, it means lots of bad things are going to happen. But remember, be in the right assets. They go up. And there's lots of crap that's going to be hit by this recession. They're going to go down. Just don't hold them. So overall market indicators, it's like looking at Bitcoin dominance. It's kind of meaningless. Now, if that's the case, if we do go down, I'll stop out of positions based upon relative lows and reassess if needed. And the actions to take are trade, hedge, and DCA. That's it. have your hodl bag, have your trading bag, and play it. And that's how I see it. Finally, conclusion number 3. This probably the most important slide. Risk reward. So the downside of Bitcoin from where it is now, say 22,000, is 17,500. So you could take a 20% haircut. But the upside is getting back to an all-time high. And that is a 204% return on investment, or more than a 3x from where we are right now. So the question you have to ask yourselves, is the risk worth the reward? Not financial advice, but to me, these are generational times to do things. Also, the volatility is great, so it makes for very good trading too. So with that, that was 60 slides. Hope you enjoyed it. RCX, thank you so much for the great questions. Everybody, challenge me. It's very important. Always to challenge your own biases and perspectives on everything, because nobody is perfect. And thank you to the mods out there and everybody watching, the 3,000 people. Love you all. Smash the like and subscribe if you haven't. But there is no other channel where you'll learn as much as here. So pretty confident of that. Thanks all. Bye.